welcome once again. If this is the first time you are joining us or you are seeing this video, then let me give you a brief introduction. So this is an accounting software we developed with Excel with no coding. Yes, you heard me right. We use the basic features on Excel and then we use the formulas in Excel in developing this accounting software. To get a better view, we are going to test if everything is working correctly. And for those who joined me from the beginning, I would like you to go check the ledgers to ensure that there are no transactions. So first we go to our cash books. We have EcoBank. Okay, so you need to clear everything, Fidelity, cash on hand, and then the extra cash books. You need to make sure that there are no transactions in here. You come to your ledger, you ensure there are no transactions in here. All right. So we have a data here. So this is the data we are going to use. This is the opening balance, which is the trial balance for 2021. And we have some transactions over here. These transactions are going to be made available in telegram groups for you so that you can access them with ease, right? Okay, so let us get on with making the entries. Bear in mind that this software was done to separate cash transactions from non-cash transactions so that for simplicity, right? So this becomes the opening balances, and for the cash and bank opening balances, we are not going to use the journal entries. We are just going to enter them in the cash books, right? Let us make this side by side. All right. Okay, so for those who joined me in developing the software, you need to first go to the chart of account and ensure that the opening balances you have it entered or set up in your chart of account, right? So you go to the chart of account and you go to the cash and bank, right? So you start making the entries over there. We have cash in hand, I think, so we can just correct it over here or even leave it as such. We have Fidelity Bank. Okay, so we have a Fidelity Bank entered. We have EcoBank, and it is also here, right? So this is the first step. You need to ensure that all of the charts of accounts or the kind of transactions that you have, you need to set them up at the chart of account first, like we do set up for every accounting software. You need to ensure that the chart of account relates to your business, right? So once you are done, then you go back to the the relevant ledgers to make your entries. So the first one is the cash in hand. So we have it here. You go there and then the date, it is going to be 1st January 2022. Bear in mind that this one is the opening balance in 2022 and then the transactions are below here, right? So the main classification, remember, it should be equity. I'm using 365, sorry, Excel 360. So with Excel 360, if you have a drop down list of drop down, when you start typing, it is automatically going to give you autofill, right? So equity, and then it is the item or the sub classification. It has to be opening balance, and this is a debit, so 2000. Then we go to Fidelity Bank, the same date, 1st January 2022. Main classification, it should be equity and then opening balance, and then debit of 92577.01. We go to EcoBank, the same trend. All right. Then we move to the inventory side. The next one is inventory. Remember, inventory is not a cash item. So we need to make the entry in the journal entry, right? So we go there, and the date, it's still going to remain 1st January 2022. So, but then you need to check to see if you have it in your chart of account, right? For those who started with me, we don't have this in the chart of account. So you need to go there and then add it as part of your current assets. Okay, so let us continue. So for this one is a debit item, so it is going to be current assets. Sorry, the main classification has to be current assets, and here it is inventory, and it is a debit balance 2326611.66. Then the credit classification, it has to be equity, right? And opening balance. Now we move to the next. We also have trade receivables, the same trend, current assets, inventory. This one is trade receivables. So if you don't have it, you need to go to the chart of account and then add it as part of the current assets, 255911.99. Right. So we have trade payables, the same date. Now remember, trade payables is a credit balance, right? So you are going to debit the equity with the value, which is 88,484.4, and then the credit entry, sorry, here it should be equity opening balance, and here would be the trade receivables. So liability, current liability, and then trade receivables, sorry, trade payables. Okay, so audit accountancy fee too, it is going to follow the same trend. You debit the opening balance and then you credit the audit and accountancy fee payable. If you don't have it in your chart of account, you need to go there and then add it. So I believe the rest you should be able to do it. Bank loan will be non-current liability. You need to add it up. So I'm going to finish up with this side, and then the rest, the ones that we may have issues with, I go through with you. All right. So we are done making the entries for the opening balance. Let us go to our report to see if everything is captured correctly. All right. So our trial balance is showing that everything is balanced, right? So it means we are on track. Now the next thing is to make the entries for the current period. So likewise, this I'm going to go through a few of them with you. Then you try the rest yourself. So the first transaction is a cash sales of 45,000. Now this one is a cash sale. So which ledger are we going to make the entries in? Yes, you guessed right. So the cash on hand, right? So the date is 5th January. 5th January. All right. So cash sales. Now remember that you need to make sure that whatever you have as revenue is captured in the chart of accounts. So here we just have, sorry, chart of account, we just have sales. So assuming you have several revenue streams, you need to make all of them the entry here. But for now, we just have sales. So in our chart of account, we are going to just write sales under the revenue. All right, so let us continue. Cash on hand. So cash sales, and the main classification is going to be revenue, and the item is going to be sales, and we are receiving cash, so it is going to be a debit balance 45,000. The next one is a credit sales to Andy Limited. So where are we going to make the entries? Correct, you guessed it right. This is a non-cash transaction, so it will go into the journal. And the double entry principle is that we are going to debit our debtors account and then we credit sales. So let's get on it. So January 6th, 2022, we are going to debit our current assets, trade receivables, and the amount is 10,000. Then we credit our revenue. So the supplier or the customer's name would be here, and the name is Andy Limited. Okay, so maybe we should have also included database of our suppliers and then our customers, but maybe in the latter, maybe when I get more followers and the request comes in more, we are going to include all of that, including even other reports such as um, the general entry, as well as maybe debtors balance, debtors, the transactions, the general ledgers for each each the general ledgers. Let me put it as such, right? So for revenue, expenses, assets, and liabilities. All right, all right. So here revenue and sales. Now the next transaction is we bought treasury bills by EcoBank, right? So this one, it is a cash transaction and then it refers to the EcoBank. So straight away we select the EcoBank and then the date is going to be January January 6th, 2022. Maybe EcoBank purchase of treasury bill. All right, so here it is a current asset, right? So if you don't have it in your chart of account, all you need to do is that you go to your chart of account and under current assets, you add it, right? So let us go back. EcoBank, all right, so treasury bill, and it is going to be a credit balance, which is 150,000. We have a deficit, all right, and the seventh is that we took a loan from bank EcoBank, the amount of 200,000. Remember, this we are receiving cash, right? So the double entry is that we are going to debit the cash book and then we credit the liability. So if you don't have loans or maybe bank loans in your chart of account, you just go there and then you add it under the non-current liabilities. So let us make the entry here. EcoBank. So here it is going to be um, bank loan received, non-current liability, and bank loan. Right here we are receiving 200,000. All right. Now the next transaction is cash deposit to EcoBank. So here EcoBank, it is an intra transfer contra entry. EcoBank is receiving, cash is given out. So we are going to debit EcoBank and then we credit cash. So for this single transaction, you need to enter it twice, right? So the date is 7th January 2022, cash on hand, right? So cash deposited. So we have cash and bank, and then we select cash on hand and 45,000, right? Okay, so we go back to our cash on hand. If you don't comply with the double entry principle, you are not going to get a balanced sheet, your trial balance, and then your balance sheet is going to be thrown off, right? So the same date is 7th January 2022. Here EcoBank, right? Then cash deposited, so cash and bank, EcoBank, and here it is going to be debit, so 45,000. All right. The next transaction is purchases made by EcoBank. So you are going to also debit your purchases account, and then you credit your EcoBank account, right? So if you don't have purchases set up already here, you need to go to the chart of account and include it. Okay, so the rest, I'm going to go through everything until we get to the last transaction, right? All right, so I've made most of the entries, and three particular transactions stands out, and I feel it would be best if I take you through how it was treated. So the first one is interest received on investment, right? So remember, our investment was done was done using the EcoBank, right? So this interest received on investment would probably be received in EcoBank, right? So it is going to be we debiting our EcoBank account and crediting our investment income. But remember that investment income, it is a standalone in accordance with the IFRS 18. So it has to be treated in the investment income or in the investment profit section of the P&L, right? So this is how we are going to treat it. You select other income as the main classification, and then the item is going to be investment income. Now there was a loan as well, and this loan, it attracted in interest of 25,000, but only 15,000 was paid. Okay, so in this case, only 15,000 was paid using the bank account, which is the EcoBank. So we are going to debit EcoBank with 15,000 and credit our we are going to credit EcoBank with 15,000 and debit our finance expense or interest expense, right? And then remember that it is a finance expense under the IFRS 18. So in making the entries, we are going to select other expenses as the main classification, and the sub classification we are going to use the finance expenses. Now what happens to the remaining balance? So the remaining balance is 10,000, and what we need to do is that we go to the journal entry, and then we are going to debit other income, right? So this is it. We debited other income, and then there's the debit, the sub classification or the item is going to be the finance expenses, and then we credited our current liability accruals, right? So if you want it to be specific, you could enter accrued interest in the chart of account, and then you select it over here. This is as simple as that. And now there was rent as well. I think this transaction, there was a rent accrued from January to date, and this is not a cash transaction, so it has to appear also in the journal entry. And then the double entry principle is that you are going to debit the rent expense and then you credit the rent payable or rent accrued. And here I just treated it as accrual, right? But you can make it specific. Now, the last transaction is that a plant was sold at a cost was sold for 80,000, which the cost was 200,000 in the year 2019. This is 2019, right? So the other note is that depreciation is charged in full in the year of purchase and none in the year of disposal, right? For now, we are not going to consider the depreciation for the other assets. We are only going to consider the depreciation for the disposal of assets, right? So we know here they are telling us that PP is 20%, right? So first of all, we need to check the depreciation from the date of the acquisition to date, right? And then it is going to be 220,000. Now, how are we going to make the entries? First of all, we are going to, per the standards, the proceed is going to be credited to the disposal account, and then the cost is going to be debited to the disposal account, and then the accumulated depreciation is going to be credited to the disposal accounts, and then we determine our gain or losses, right? But here lies the case that we have a dedicated classification for the proceeds, right? It is part of the other income. Remember that when we're setting up or developing the software, I stressed on it that as part of the other incomes, which is the main other incomes, which is the investment, operating, and financing income, let us include proceeds to make it a special case, right? We've configured everything in a way that once you make the correct entries, the gain or loss is automatically going to be determined for you, right? All you need to do is to make the right um, entries. Okay, so the first thing is that the date is 8th July. Okay, so this one, it is we receiving cash. We are receiving cash. Let us assume this one was received in EcoBank. Okay, so we are receiving cash in EcoBank. So we go back to our EcoBank cash book or EcoBank account, July 8th, 2022. So we can say proceeds from disposal of assets, right? And like I explained, it should be other income and proceeds from disposal of assets, the sub classification. We are receiving 80,000. So we are done with the first part. Now the next part is for us to debit the disposal account. And if you could remember, I also stressed that we are going to use the sub item, which is gain or loss on disposal, as the disposal account. I don't know if this makes sense, but what I'm trying to do is that instead of first debiting a disposal account with the 200,000, we are going to debit it to the gain or loss on disposal of assets, right? So let us do that first. 8th July 2022. All right, so we are done with that. The description is cost element of the disposed assets. And under administrative expenses, we selected gain or loss on disposal. Now, the corresponding entry is going to be the depreciation, accumulated depreciation. But bear in mind that in setting up our chart of accounts, we separated the depreciation charges, the pool of depreciation charges for the current period from disposal, this depreciation on disposals. So here we are not just going to select accumulated depreciation, but rather we are going to select accumulated depreciation, disposal, and adjustments, right? And here it is plants and machinery. So the moment you select plant and machinery, you are done. So we are done with the first part, the cost elements. Now, the other one is the accumulated depreciation on the disposed assets. It is required that you debit the accumulated depreciation, and you credit the disposal account. And here lies the case that we've already maintained that for the disposal account, we are going to replace it with gain or loss on disposal. My I think I need to correct this. This one shouldn't be disposal, but rather the cost element of disposal, PPE disposal. This refers to the cost element, so it shouldn't be the depreciation. We are rather debiting, sorry, we are rather crediting the assets disposed, right? So if we should have selected disposal and other adjustment, PPE disposal and other adjustment. And here we select the plant and machinery, right? Okay. So the second one is where we rather debit accumulated depreciation, and we credit our disposal account. So the same date. All right. So accumulated depreciation element. All right. So this is it. And here we are going to credit the disposal account, which we have taken it to be the gain or loss on disposal of assets, which is under administrative expense. Now that we are done making all of our entries, let us go and check the results. So straight to financial statement, right? Let us maximize it. All right. So the date too, let us change it. Let us make it 1st January 2022 to 31st December 2022. And the comparative year, let us make it 1st January 2021 to 31st December 2021. You see that the moment we made the entries, the comparative period, it has turned to zero because we don't have any transaction that was in 2021. Here we see that everything is balanced. The purpose that we are seeing this heading is that it is going to be linked to it is going to be linked to when you issue print. So we've already set the print areas. The moment you click on print, it is going to select the right spaces for you to just issue your command. Now I see that this date is not correctly reflected, so we need to work on it. The C89 should be changed to C89 should be changed to C2, right? Oh no, I think I've turned it to the other way around. C89 should rather be C from, please. And C90, C2. Okay, so here I believe everything is correct. Oh wow. You can change it yourself. So we need to correct these dates. I don't think it has any bearing, but we let us keep it and check the results first. Here we see that it is correctly balanced. The financial position too, it is correctly balanced. See your cash and bank, your current assets. All right, accruals. Right, you see our revenue is this amount, cost of revenue is this is our profit. Wow, can't you see? It is beautiful. We did all of this without any coding. So if this is your first time, you can subscribe to my YouTube channel and then like for me. If you can also bring your suggestions on what we should add or what we should begin next. Everything is entirely onto the majority of my listeners. All right, so this is it, and this brings a partial close to our journey to develop an Excel accounting software model with no VBA codes. Thank you once again for watching. Bye.